All right, welcome guys to Option Bootcamp session number 6. It's hard to believe, isn't it, that we're into the 6th session. What we're going to be covering today, let's kind of get started here. So far what we've done is we've gone through, we're in week 6, and every week we've learned a different trade. Just to review, week number 1, we covered selling naked puts, and I talked to you about the wheel strategy, about how if that exercise is turning that into a covered call, in turning that into the wheel strategy. Week number 2, we talked about selling naked calls, and then, which is a bearish strategy, and then turning that into the reverse wheel, where we do covered shorts. Week 3, we talked about poor man's covered calls, which is a bullish strategy, which is buying the 70 delta call further out in time, and then selling the 20 to 30 delta call closer in time. We then talked in week 4 about poor man's covered puts, which is a bearish strategy, where you're buying the 70 delta put further out in time, and you're selling the 20 to 30 delta put closer in time. Last week, we talked about selling strangles and straddles, which is to sell both a put and a call in the same expiration period, 20 to 30 delta, and that is a neutral strategy. Now today we're going to be covering Iron Condors, and so in a nutshell, what an Iron Condor is, it's just a strangle with wings. A strangle is an undefined risk strategy, which basically means your downside is unlimited. Iron Condor, you can buy a wing which protects you from a certain amount of downside. So we'll be covering that today. And then in next week's session, I'm excited to share diagonals. In fact, I've pre-shared some of this with Greg and with TJ, who are trying, as well as Nancy, who's currently doing some of these, what I'm calling rolling put diagonals and rolling call diagonals, which is one particular of my favorite strategy around diagonals, which we'll be covering next week, and that'll complete our 7-week boot camp. Now, what we're going to do is to continue the contest in our simulators for another month or so, to allow you to practice some of these and see how they perform. So this is what the VIX looks like this past week. So you can kind of see it's relaxed down from 23 down to 19.9. And that's what it was this afternoon. Now in the final hour, it did this in the final hour. So what you can see is it shot up from 19. And does anybody else have their toss so you can actually see where it peaked? I may not have even got the latest. Does anybody else have that chart up?
Yeah, peak was at 22.5.
22.5. So even before I did that last chart, it shot up another couple, which it's considerable. I mean, that's a 15% pop today in VIX. And so you may say, well, what's the implications of that? And as I've explained before, when fear gets high, those premiums get high. So as an option seller, it's always nice to sell when premium is high. And then when it relaxes, you can begin to collect some of that premium. Now, the market has continued to trickle up over the last week, approximately 1%. So each of these black points are actually during market hours. So it's trickled up about 1% over the last week. So our agenda today, as always, I like to start off our meetings by saying, what have you learned or practiced since we last met? Key insights, key takeaways, anybody?
I have learned that I'm impatient. So instead of just doing practice account, I went live. That's what I learned.
Okay. Have you heard this knock.
Who's there?
Impatient cow.
Impatient
Moo!
cow.
So, you've learned that you're kind of an impatient cow. You want to get started. And I kind of resemble that remark in some ways. I like to try to learn by learning. I know some of you know our friend Quan, the poker player. And I think he told me that when he first was learning how to play poker, he lost about $11,000 playing online limit, some kind of limit poker. So, I asked him, I said, how long do you think, if you'd had a few tips and pointers, how much would it have cost you to learn? So some of us kind of learn by doing, and, the school of hard knocks is a good educator. Some people learn from it. Some people get knocked around by it. But it's been said it takes about 2,000 hours of deep and deliberate practice to become world-class at anything. And hopefully with trade diff and with these simulators, we could actually speed that up. So what about the rest of you? What have you learned or practiced since we last met?
A little teeny poor man's covered call, but I had a question, Dale, that could help me.
Okay.
On the either the poor man's covered call or covered put.
Okay.
Is there a ratio that would make it simple for me in terms of the buying versus the selling? Is it 1 to 6 or something like, how far out do you go? If, there should be, I suspect there's probably a ratio, and then you can apply that to whether you're doing monthlies or weeklies or anything, and so I'm wondering, do you have a rough rule of thumb?
If I have a long-term bullish premise on something, like, for example, I've had a long-term bullish premise on Apple. I just think everybody's addicted to their phones. It churns out a ton of cash, just for me, a long-term premise on Apple. So, this is March. And if I was setting up a poor man's covered call in Apple right now, I'd probably buy the Januaries and I'd sell the Aprils. Now, having said that, there's nothing wrong with selling the weeklies on, especially something you have a long-term premise on. I would say that one of the top criteria, though, is your own time commitment. And Greg, I know that you're a busy guy with your restaurant and lots of stuff going on. So you just got to decide, because it takes a little bit more work to keep up with all the rollings around weeklies.
Yes.
And if you're not on top of it, you might have it, the weeklies expire either in the money or out of the money because you weren't able to adequately bird dog it. So I'd say one of the biggest criteria is, what's my time availability?
Yeah.
And so experiment with that. Try the weeklies, but if you get overwhelmed by all of them, then go with the monthlies. The one benefit of the monthlies is that there's a lot more liquidity. Now, if you're trading something like Apple, it won't matter that much about liquidity. But if you're trading something that has less liquidity, I'm amazed that Google tends to not have great liquidity.
Wow.
But something that seems to be rather large, or it should have, maybe it's because they split it between GOOG and GOOGL. I'm not sure.
Okay.
There was that one. And then, so that was really your question about how far out do I buy the long, right? And then I think I kind of indirectly answered your question about weeklies or monthlies.
Okay.
I mean, that's my philosophy. Tommy, do you have a philosophy on whether or not you do the weeklies or monthlies? Or
I don't. I usually look for the one with the most premium.
Yeah. And look at it and see. You can always see if liquidity is bad. Just kind of see how the monthly bid-ask spread differs from the weeklies.
Yes.
So I tend to do most of my poor man's covered calls on the short leg, whatever's closest to 45 days out. If I'm midterm bullish, or, it's going to take less buying power if you start buying the Junes or Julys, it's going to take you a little bit more buying power if you're buying the Januaries. So it kind of depends a little bit on your account size too, and how much buying power you have.
Good point. Okay.
Yeah. All right. Anybody else? What have you learned or practiced since we last met? I'm dabbling around, and I haven't quite mastered the whole, what would you call it? Swing trades, and Tommy and I are always kind of collaborating on those. We collaborate also on the iron flies. And what I'm learning is not get greedy. I mean, just take a small win. And so many times I've passed that small win and tried to, rather than taking the $1.50, I gamble and try to get $3, and then I end up losing $5. Tommy, can you relate to that?
Oh, I can relate heavily to that. I've looked at that. It looks like it's doing great, and I start seeing dollar signs in one day, and I'm like, oh, I'm going to be able to collect 4, 5, 6,000 a day. And
Yeah.
then something happens. Some news comes out. The market switches on you, and you're going from up 2,500 to down 18,000.
It's almost like continuing to play that last hand when you're racking up your chips, right? You're just kind of like, I don't know how many times we've seen that in badly.
Yeah.
Right. So I think I even take notes to myself, I was trying to think of what's the opposite of don't get greedy. And I think for me, wording it in a positive way is be grateful, take a small win. And so I, even before I start the day, I've kind of got my plan. And that's one of the things that I write down is just relax is one of the things is my little mantra, because, if you're all wired up, if you're nervous, maybe you're not going to make the best decisions. But another one I say is just to be grateful. So that's something I'm learning. So anybody else?
Set a goal and stick to it.
Set a goal and stick to it. Good. And you'd be amazed if you add up all of these small wins, how well you can do versus trying to hit a grand slam. I would say that in your 20s and 30s, it's totally fine if you want to hit a grand slam. But I think as I age, getting on base every time I get up to bat becomes increasingly important. Revisit our plan. Our plan is to learn one trade a week for 7 weeks and practice that along the way. Today, we're learning about selling Iron Condors. And to what degree have you guys sold Iron Condors in the past, if at all? Any of you traded Iron Condors?
I have not.
Not?
Sold a lot.
No.
You've sold a lot of them.
Mhm.
Nancy, I know you have traded them.
Yes.
You've also traded Iron Condors. So I think Brandon, the first time he heard this, said, is that really what they're called? He thought I was just like making up goofy names for things. But yeah, and I'm not even sure why it's called that, except maybe somehow it looks like I don't know. Anybody else know? Like the origin of that name? I don't know. So our accountability plan is just kind of, as I've mentioned before, the difference between a good athlete and a great one is a great one falls in love with practice. There's no way to get good at this stuff without practicing, and hopefully the homework will help you in doing some of that in the simulator. So let's take a look at the leaderboard. Chris Mutafov, who is in a meetings, was not able to join us today, but he's slipped in to first place. And I think him and OJ were kind of back and forth during the day. I think OJ at one time, and Brandon, nobody's in our waiting room, are they? Can you see?
No, they're not.
All right. So OJ, I think at one time slipped into first place, but Chris kind of overtook him. Chris had a big move up this week. James Galindo's third place. Oki Brock, my nephew's in fourth. Alex, good job, Alex, is in fifth place. Brian Hasley is in sixth, and Ron Miller, who's with us today. Are you with us, Ron?
I'm here.
Okay, good. And Charity, it was in eighth place, and TJ, Tejas Tommy, is in ninth, and it looks like Mike, my partner at Trade Diff, is in 10th place. So if we look at, I wanted just to do a review. So if you guys can give me a 2 to 3 sentence. So first, let's go through the things that we've learned. First, a naked put, is that a bullish or bearish strategy? Selling a naked put, bullish or bearish? Bullish strategy. All right, so where are you selling the put? What delta?
30.
20 to 30. 20 to 30. So if it goes down, if price goes down and hits your naked put, what are your 3 options?
Exercise, roll out.
Exercise it. In that case, you're taking possession of the stock, rolling it out to a further date,
or closing,
or buy to close. So it's the nomenclature is a little confusing in options. You got to sell to open, but in this case, it would be a buy to close. In terms of a naked call, is that a bullish or a bearish strategy?
bearish.
It's a bearish strategy. So if the market goes up and hits your naked call, what are your 3 options?
Same 3.
Same 3.
Well, in a naked put, it's taking possession of the long. So if it hits your naked call, what do you do? What's your options? Would you take possession of a long?
No.
You'd take possession of a short if it hits your naked call. Your other 2 options is roll it or buy to close. So a poor man's covered call, is it a bullish or bearish strategy?
Bullish.
Bullish. What delta are you buying further out in time?
70.
70 delta. And what are you selling closer in time?
30.
20 to 30. Now, a poor man's covered put, is that a bullish or a bearish strategy?
Bearish.
Bearish.
Okay.
And what delta what delta put are you buying further out in time?
70.
And what are you selling closer in time?
20 to 30.
20 to 30. A strangle, is it bullish, bearish, or neutral?
Neutral.
Neutral. And what are you selling for a strangle?
20 to 30 put.
20 to 30 put. And what else?
And 20 to 30 call.
And 20 to 30 call. Now, are you doing that in the same expiration period or different?
Same.
The same.
Same.
That's a strangle. So that's a good, just quick summary of the 5 things we've learned so far. Any questions about those? All right, last week we talked also about managing a strangle that goes against you. Anybody want to give me a summary of your options? So let's say you sell the put and you sell the call, and the price is testing on the call side. By testing, it's starting to hit up very close to your call, short call strike. What's your options in order to manage that strangle?
You close it out completely.
You could close it out completely. That's always a possibility. But there's another element of managing the strangle. Do you guys recall that from last week?
You can move the untested or the put side closer.
You
the
could
call.
roll up the untested side. So essentially, if it's hitting up against the call strike or past it, you could roll up the put essentially all the way and turn the strangle into a straddle. Now, you don't have to go all that way, but let's assume it's blown past your call. As a minimum, you could roll that put up and turn it into a straddle. The benefits of that is sometimes you can take a loser and turn it into a scratch or a small win. So if your win rate is 70% estimated probability and you're turning a loser into a scratch, then all of a sudden you've dramatically improved your win rate.
Agree.
So some trades that worked this week, and I don't guess OJ is in our weight room yet, but Johnny Juiceball looks like he had a big win on Netflix. TQQQ, which is a leveraged instrument, Riot, Mara. And since he's not here, I won't ask anybody. I was hoping some of those people could be that explain their reasoning. Chris had a big win in United Airlines, Pfizer, a couple of big wins on United Airlines. On text message, he said he was just banking on a reopening of the economy affecting travel. James is not with us right now, but he had wins in Riot, Mara, XNet, and RBLX. Now, Alex is with us if he's not on his Peloton. And Alex, you had a GameStop win. Was that a bullish? I assume it was a bullish bet.
No, it was bearish.
It was bearish. And how did you play it?
So on the first pop, when it came back through, I put my naked call on there, and I was doing really well because it had a little dip afterwards. And I didn't just take the gains, as your lesson was. I didn't have gratitude for it. I thought, this one's going to be great. And so it popped back up, and I was in the money for about a week and a half. And then it came back down, and we had a nice little profit. So I went ahead and closed it out and was okay with, and I finally reached that point of gratitude there at that point, even though it continued to go down a little bit. I was happy with that win when it was in the money for so long.
Do you remember what your call strike was that you sold?
I don't remember.
Yeah.
It was a while back. Yeah, I was down to the wire too.
Okay.
The expiration date.
Okay. At any time during the trade, did you lose?
I'm not sure how to answer that. Was there were there days that I didn't collect premium? Absolutely.
And no, I guess the question is, as you looked at GameStop, because we all know it's been like a roller coaster. And was there ever a time when you had sold that premium where it went up, so temporarily you were a loser?
Correct. Yeah, a long time.
Okay. But you held on, and then some of that profit came back.
That's correct.
Okay. And then you had, looks like American Airlines, and I assume that was a bullish play.
Yeah, that's similar to Chris with things reopening. There was a day early in the market that all the airlines had popped a little bit. So I pulled up airlines, cruise lines, and Airbnb as some of my go-tos.
Okay. And Airbnb, also that travel reopening, and Carnival Cruise Lines, I assume the same thing.
Correct.
Okay. And Brian is not with us, but his wins were in Amara and in J&J. So those were some trades that worked this week. In terms of accountability, our 5-star student awards goes to Johnny Juiceball, TJ, Nancy, Brandon, Chris, and Ron, who've completed all their assignments. If you've not completed your assignments, continue to do so. The best way to learn something is to practice it. So let's talk about, we're at 527 now, and let's chat about the Iron Condor. It's a defined risk trade. What is a defined risk trade? An undefined risk trade means that your losses could be unlimited. Defined risk trade, you know exactly what your max loss is going in. And Iron Condor is a defined risk trade. Essentially, what you're doing is the same thing with your strangle, is you're selling both a put and a call, 20 to 30 delta, and then you're buying wings, 5 to 10 delta. So essentially, this is a 4-legged trade. So there's a little bit more transaction costs to a four-legged trade than a two-legged trade. A wing is something that defines your risk. The wider the wings, the more this thing behaves like a strangle. Now, why would you want it to do that? Let's assume you really want to trade a strangle, but in your IRA, they won't let you. They won't let you trade. At least it's actually, it's defined. This law is defined by the broker and not by US law, because I know that Tastyworks allows some undefined risk trades, naked stuff in IRAs, but Thinkorswim and TD Ameritrade won't let me trade a strangle in my IRA. So the best I can do for this type of a neutral trade is to do an Iron Condor. Wings serve as insurance. Insurance may negatively affect your profitability, but it could also save your butt when some black swan event occurs. I don't know if you guys have heard the term. Have you heard the term black swan event before?
Yes.
Can you tell me what it is?
It's some Scholz model, right? It's some model.
It's something that
Something.
nobody saw it coming. So, I mean, like 9/11, we didn't see it coming, but yet it affected everything. You know, we didn't see COVID coming, right? I mean, the whole definition of a black swan event means it's very rare, but every now and then something happens that just, man, you didn't see that coming. And it's nice to have that insurance when something happens that you didn't see it coming, because you know, it doesn't take you down. Insurance serves as a drag, but it keeps you in the game. You know, as we say sometimes, live to fight another day. You know, when we experience a really difficult day, live to fight another day. It lowers your buying power for smaller accounts. So I can show you, for example, my nephew's account. He's a dentist. He started out as a young guy. He started out with $10,000, and you know, I trade it. I've got pretty much a buy and hold. I take 25% and put it in QQQ, TLT, SLV, and SPY. And then what I do every month is I put on 2 Iron Condors, neutral strategies, in his account. So that's kind of, I think it's really good, especially for smaller accounts. And the risk graph on an Iron Condor looks something like this. So right here, this is where you begin to win. Up here is your kind of your max win. This is your break-even points. And these are your max losses. And depending upon how wide your wings are, your max loss could be, you know, further down. I know, Tommy, you've traded a little bit of Iron Condors trading Amazon. Am I correct? I think you're on mute.
You're on mute.
Yeah.
Hey, yeah, I have done a little bit of Amazon. I've done some earnings trades using Iron Condors,
Okay.
things
Now,
like that.
can you tell us, why didn't you trade a strangle using Amazon?
Buying power.
Yeah.
Takes
I
a
mean,
lot.
what's Amazon trading at now? 3,000 and what?
Yeah.
Yeah, it's not easy. I mean, that just takes a ton of buying power. And for many of us, our accounts can't afford that amount of buying power. So the only way we could trade something that large is to take less buying power. And the way you get around that is by trading an Iron Condor. So what I want to do now is I want to get out of the PowerPoint and I want to demonstrate an Iron Condor. And first I wanted to show you, here is like my nephew's account. I just explained that, you know, for his, it's kind of a buy and hold. I put 25% in QQQ, SLV, SPY, and TLT. And that's kind of what I like to do for people who, you know, Reed said he wanted to learn about trading options, but every time I talked to him, there was one of his 3 screaming kids in the background and some bicuspid that needed to be filled. And so he really didn't have any time. So I just put 25% into each of these. Once a month, I'll trade an Iron Condor around it. So the 2 Iron Condors I have on is an IWM and SPY. They're highly liquid. And so just kind of let me show you here. Here's the SPY. Let me take off
Hey,
the
hey,
stop.
Dale.
Not,
Yeah,
yeah,
I'm
it's
not sharing
showing.
it. All right, thank you. All right, so this is his Iron Condor in SPY. So let me pull these in and just kind of show you his probability of profit. I put this one on in April. I've had it on a while. It expires on April 16th. So his probability of profit is 67.24%. And TJ or Brandon, if you were playing Pot Limit Omaha and you knew that your probability of profit was 67.25%, what would you bet?
Old. No, I've played a lot less percentage. You know that.
Yeah, but
no,
if you
absolutely.
knew your odds were 67.25% and the action's on you, what would you bet?
Yeah. Oh, you're going all in.
You'd bet the pot if it's pot limit. The dealer would
Yeah.
remind you that this is not a no limit game, sir. You can only bet the pot. And then you would realize that, oh my gosh, I just embarrassed myself. Pot.
Hot.
So there's a 67.26. So his max win on this is $478. He's collected 190 so far. But if I was to get up to that 235 mark, I'd probably close it and reestablish it, which is some of the best practices of Tasty Trade. And as I have told you guys before, I don't always follow the best practices, but if I happen to be looking at it and I go, wow, I like this other trade. It's almost like a kid in a candy store. If you find something better that you like, you'll look for opportunities to close some stuff that are at 50%. His max loss on the downside is minus 1508. His max loss on the upside is minus 1522. 67% probability of profit. So that's one on SPY. And I also have one I did on IWM. And IWM, and it's a 71.41% probability of profit. Max loss on the downside is 857. On the upside is 1657. Now, both of these, because the market has been moving up, we've got some negative deltas on here that both SPY and IWM is applying to this. But it's giving us positive theta. So he's getting almost $20 a day in theta decay. And what that means basically is all other things being equal, he'll make 20 bucks. So the market has to beat him by going 20 bucks past before he starts to lose money. Delta, beta weighted deltas basically means if SPY goes up by $1, he'll make five bucks in that account. So somebody give me an example of a trade that you might be neutral on, and I'll set up an Iron Condor on toss. Anybody?
Amazon.
What's that?
Amazon.
Amazon. Okay, this is going to be, it can be pricey, but we can choose to have the wings closer in order to do it. So let's look at, and let's do one in Amazon. All right, AMZN. And it trades at $3,027. And our goal right off the bat will be to do some tight wings. Tommy, do you remember how far out wings you did in Amazon?
I want to say I went out. Show me, you setting up 20 or 30? What are you setting up here?
I am doing the short side of 20 to 30. So here's a 19. There's just a ton of premium in here. So I'm going to go a little conservative, like 19 here. But so it's like 3270 and 2800
Yeah, so I would go out pretty far, probably another 50 points.
You think how much buying power do you think that's going to take?
I have no idea.
All right, 50 points. All
Wait a
right,
minute.
so
Wait,
let's see.
oh, those are hundreds. Wait a minute. Never mind. Never mind. 2, 3. I don't know. Go out 3 or 4 strikes. See what it gets you.
That's a 200.
Yeah.
Okay, so the 2600 and the other one, the call side is 3270. So that would be, what we got when we went 200 wide?
200 out.
All right, so these are,
They're a little
God,
more. Just go 3. Just go 3 strikes.
like this.
Mhm.
That's only, the call side looks like it's different increments.
I find that a lot in toss.
And that's weird.
Almost upside down. But when you put it on, it'll show different. Try it.
Because I just can't help but think that this is going to be a skewed Iron Condor.
It probably will be.
Yeah, look at it.
Oh, yeah.
Yeah. All right, so let's change that and let's do, let's see, 3270. How far out? That's 200 points. What's 3290 minus 200? 31, 3090?
Yeah, was that even available? Oh, yeah, there.
Yeah, okay, that's more like it. But this guy is still going to take $17,000 in buying power. So you see how you're going to have to go a lot more narrow unless you guys are, you know, a bunch of Warren Buffetts that just accidentally slid under the radar screen. So let's just kind of play around with that and let's go a 50 wide and see if we can afford it. See if it's more fits in. So there's 2,800. Let's go to 20, instead of 2,600, let's make it 2,700. And then this one would be 3,190. So, and let's see what kind of buying power that takes. This one would still take 7,665. So now it's kind of, you know, more affordable, right? But, and you guys, I think, could fit that into your buying power. If not, you could affect the wing. So let's see what the probabilities are for this guy. And it's
Where does the current price show, Dale?
current price of Amazon.
Does it show on that screen by chance? or
No,
not?
3027. And it's this little notch right here. See that little notch?
Yes, thank you.
It's
Thank
that
you.
notch. So this is a slightly skewed Iron Condor. It's not exactly, you know, in the middle, but that's okay. Our max win is 2347. Our max loss on the downside is 7653 and 7653 on the upside. So this would be an example of an Iron Condor. I tend to like to get my probabilities a little higher than 50%, but there it is. It's definitely doable.
Dale, in your thinking, am I thinking correct or am I out of whack? I'm thinking of this Iron Condor the whole time as 2 credit spreads. One's a call credit spread, one's a put credit spread. Am I off base or am I?
No, you're on base. It's just sometimes people can have a skewed in the fact that Iron Condors is it's balanced. You know how
Yes.
sometimes people can have like I mean, they sell the 10 delta and SPX on puts and they sell a 5 delta on the calls or something like that. That would be a skewed Iron Condor.
Yes.
It's skewed one way or another because you kind of have a bullish or bearish premise.
What are the odds of getting taken out on both sides? Is that
no, not on an Iron Condor unless you take off 2 legs
okay?
because you're not putting them on separately.
Mm-hmm.
Now, that doesn't mean it can't test one side or another. Now, one of the things about Iron Condors is they're a little more complicated to manage because you're going to have to roll 2 legs instead of 1. Strangles, you could just roll 1 leg, but with Iron Condors, you got 2 legs. If you don't roll the long, it's going to change your buying power. TJ, have you ever run into that? Have you ever tried to roll an Iron Condor and, all of a sudden it took a whole lot more buying power and then you had to try to roll both legs?
Yeah, and it can be hard to roll 4 for sure, and 2 can be tricky.
Right. And Nancy, you've probably run into this in some of your diagonals where all of a sudden you don't have the buying power and you're trying to either close out the trade or roll both the long as well as the short. Am I right?
Yes, yes.
Yeah,
correct.
you've run into some of that. So there we go on toss. And so let me bring over the trade diff and I'll demonstrate an Iron Condor on that. And I'll do it in my $1 million simulator. So somebody else want to give me an example of an Iron Condor? Of a trade or a position that you're neutral on.
I'm actually going to do Caterpillar in this one.
Okay. Well, you mind if we demonstrate it then?
Go ahead.
Okay. So if we click on trade here and we go Caterpillar CAT, I believe.
Yeah.
Do you know what the volatility is on Caterpillar by chance?
I have not looked.
Okay. Let me.
Tommy, does this imply that you're neutral on Caterpillar over what time frame? Give me a rough idea.
I would say 30 to 45 days.
Thank you.
Okay, Caterpillar currently has an IV percentile of 40% and an IV of 35. I haven't checked when earnings is. That's always a good thing to check. Not that you won't still do it, but earnings presents a bit of a risk because while it increases volatility, as you guys know that have traded earnings, a lot of things could happen around earnings. So let's look at this. So we're buying, in this case, we're selling the 20 to 30 delta. So here is a 28 delta on the put side. And I'll look at something comparable. Gosh, it's going to have to be skewed because this one there's a 19.9. Let's go ahead and take that, I guess.
Yeah, I would be neutral to bullish on that trade, so I definitely wouldn't go poster.
Okay, and now let's look at like a strike. So if we just, my benchmark is the wings are 5 to 10. So here's a 5 delta 190. So if we click on buy there, and let me find that here's a 5 delta a 280. So we'll buy there. So that's what that trade would look like. And so I'll go ahead and click on submit. Now in this account, I don't think I have Iron Condors set up. But so if in fact you don't, just to review, you click on settings and you scroll down to where it says new groups and you type in Iron Condor, create new group. And then you go back up to the top to click on the name of your portfolio. And then you see this came into ungrouped and you click on the 3 dots and you put it into Iron Condor.
While you're there, Dale, do you mind recording a note about that trade? I did that this week and I somehow lost the note. I'm wondering, what did I do wrong? Can't find it. So
Yeah. Sure.
A screenshot and or a note would be awesome.
Okay. You want to take a note on this trade?
Yeah. Like, I typically take a picture of the toss
Okay.
confirmation. So
yeah, there's a couple of ways to do that. And underutilized is to go up here into snapshots.
Yes.
And then you click on create snapshot. And then it creates a new snapshot of that entire account. Then you can click on view snapshot. I can then go down until I find that trade. In this case, it's in Iron Condors. So I'm going to click on each of these legs. So then it highlights it here. Now, if I want to highlight all 4 legs, I could go in and click on them, you know, one at a time until all 4 of those legs are highlighted. So as you see, it did that under selected trades. And then what I could do is click on this and click on add note. Brandon, tell me, just give me a sentence or two about your reasoning for this choosing Caterpillar.
Tommy,
Tommy, yeah,
TJ.
TJ.
What's that?
The volatility was 35 and
Which is
the
pretty high.
Ivy rank was 40, which means I get paid more in premium, you know, whatever you want to do here. And then when you click on submit, it will save that note into those snapshots.
Okay.
So in the future, you can see that note right up here in snapshots. And then you could go into view snapshot and then you could see it. Now, the cool thing about this is you could capture that URL and then you could post it in Facebook, or you could post it in, you know, whatever social media site that you want to share with somebody about what you're trading. So all this becomes a collaborative experience. So you could, you know, if you had a YouTube video and you wanted to post the YouTube ID video here, or add an image, you know, I could add an image and put that screenshot in there in terms of a file.
Very helpful. Thank you.
So I guess you guys know how to use snapshots. Now, you know, it's not as easy as Slack. You can't just copy and paste. You'd have to store the saved image to your computer, and then you'd have to click on choose file. And, you know, I'm going to choose this dog crate, right, that I'm trying to get rid of, you know, and then it would just add that image. See, there's my dog crate I'm getting rid of in case anybody needs one. It's a huge one, right? It makes it look huge. It's not that big.
Great resolution.
Yeah, it's not that large. I was trying to give it away in my homeowners association. For those of you who know Clint Baker, you know, he gave it to me, and his dog was a lot bigger than my little dog. So my wife decided that's too big for us. So there, I've demonstrated it a couple times. It's 550. What questions do you guys have?
I'd like to know more about rolling on toss, and I'm assuming I just find the spot where it says roll and I roll that side of it. I haven't done one, and so I'm a little worried about rolling, I guess.
Yeah, and rightly so. Let me kind of bring that over here, and just a second. Let me bring that up here. Toss. And see if I could just demonstrate that for you. Here is, let's say IWM. I've got this. So what you would do, if I'm wanting, you can't see the screen. Yeah. Thank you for that. All right, so here's IWM. There's 4 legs to it. Let's assume that it's hitting up against my 240 strike, and I want to turn this Iron Condor into an Iron Fly. So what I'm going to do is I'm going to click on these 2 legs. So what I'm going to do is I'm going to roll this 201 put to 240. So I'm going to click on create rolling order. Now I want to make sure that it's the same date. You don't want to make a mistake and roll it forward, because the default is to always roll it forward in terms of a date. So what I said is I wanted to roll it right to 240, the put. So I'll do the short put. I'll change this to 240. And now I don't want to adjust the buying power. So I've got to see what's the width that I currently have, 20 points. So I would want to go to 240 to this would be 210. And I'm just picking the same width. And so I would collect $12.81 credit. So if I click confirm and send, that would be $1,279 that I would collect. Can you see that, Greg?
Great. That helps. Thank you
Okay.
for walking through that.
Good question. Anybody else? Hello, OJ. I see you've joined us. Good to see you.
All right. Late work meeting kept going and going.
Hey, I get it. Meetings, bloody meetings, right? OJ, since you're with us, I wanted to give you a chance to tell us a little bit about why you selected some of your winning trades this week.
Sure. Which ones? Which ones do you want to go
All
over?
right, I'm finding in my chart again.
Netflix.
Yeah, here we go. Yeah, one of them was Netflix.
So that was kind of like the market sentiment that I felt like yesterday and today and this week. I feel like Netflix, with the kind of economy reopening, people are going to move their money out of Netflix because they don't believe that going in the future that they're going to have strong sales. They're not going to have, a lot of viewership. If the vaccine's going to come through, people are probably going to be outdoors for the summer. So they've had a lot of canceled subscriptions. And
Okay.
and also the fact that the Fed, I know that yesterday they're going to say not going to raise rates or whatever, and they're not. But today, I felt like the bond prices were going to cause a depression in the market.
Okay, so you took a bearish position on Netflix, and how did you play it? Poor man's covered put, or
So I did.
sold
So
naked calls?
So I took that position a while ago. So I did a poor man's covered puts, and I've been selling weekly strikes against it.
Okay,
Yeah.
and your TQQQ, which is a leveraged QQQ, is it a leveraged bullish or bearish?
It's a triple leverage with the QQQ. I would say it's more bullish than bearish.
Okay, triple leveraged. So, but is it a triple bullish?
Yes, it is a triple
Okay.
bullish. It is.
Okay.
It is. Yeah, it is not a bearish ETF where if the market goes down, it makes money.
Gotcha.
Yeah, it's a bullish.
And this will kind of turn your mind inside out. I don't know if you guys have ever a leveraged bullish. Now, did you take it bullish or bearish?
I did a straddle.
Did a straddle. So you played a leveraged bullish position neutrally.
Yes.
Okay.
Because it was yesterday with the Fed releasing their news, right? Kind of like when I was putting in the chat about SPX.
Right.
The reason why I did the straddle was that I felt like the volatility was going to be crazier than the premium that I was going to pay.
Now on Slack, I couldn't quite tell if you had bought it or sold it.
Yeah. Oh, yeah.
I said
it. Yeah.
So
I meant
I did a straddle. So, because sometimes people buy straddles expecting a big move, but what they don't estimate is that the volatility crush. And I don't know if you guys know what volatility crush is, but it's got to move more than all that premium that is built into it. And
so yesterday on that with the premium, I needed it to move 20 points to be profitable.
Okay.
Or no, well, I needed to move more than 10 points to be profitable.
Nice bet, I think.
Yeah, so if it moved 10, I would break even. Anything after that was jelly. And so when I went up to like 39, 6 or 77 or whatever, that's when I sold it. So off of like a $2,000 investment, I was able to make like $2,800.
Nice. Now, did you do this just in the simulator? Or did you do it in your real account?
No, I did it in my real account.
Okay.
I didn't do the SPX in the simulator because we can't do SPX in the simulator.
Sure.
So I did that and TQQ, both of them in my real account, and I did the TQQ in the regular account.
Nice win.
Good diff, yeah. So
nice win. And Riot and Mara?
That was just because Bitcoin was going down, and I know they moved with Bitcoin.
Okay. All right. Well, thanks for that.
Yeah, I did put on those. So
And I wanted your assignment this week is to put on 2 to 3 Iron Condors in something that you're neutral on. And I wanted to also, let me go ahead and share my screen to, in terms of toss, you know, I'm always scanning for volatility. And, you know, if I'm looking over here, Baidu would be pretty good to sell strangles or straddles on. It's got let me give me a little bit more room here. It's got an IV of 34 and an IV percentile of 69. Now, I sent this to many of you in terms of there's two, I use like Sosnoff setup. This is the most liquid underlyings that Tom Sosnoff, who's the creator of Thinkorswim, and he's the creator of Tasty Trade that just got bought for $1 billion. So I'm sure he's not eating at McDonald's since he was made bank on that. Amazon, you know, but it's a pricely underlying. Baba looks like it's got pretty good premium. Snap looks like it's a good candidate. So those are all. And then if you're wanted to look at liquid ETFs, which is also a good place to go.
Did you look at the NFTs? Have you looked at that, like TCAT this morning?
No, I haven't. But this is always, I primarily go to these two lists because of the liquidity. And one of my most important factors in my real account is to trade things that are highly liquid, as I've explained before to you guys. XRT, TLT is a pretty good ETF to trade neutrally because you get paid for it.
And this is for what strategy? Iron Condor strategy?
For either Iron Condors or Strangles. So I especially look to higher IV things with higher IV to choose Strangles and Straddles. Any further?
Strangle, right? Because the strangle, is a strangle is when you're selling it, or
a strangle? Well, you could buy a strangle as well as sell a strangle, but we're primarily focused on selling here because it has higher probabilities.
I'm a tad confused if I'm going after Iron Condors this week. I want to look for higher IV liquid products. Is that right?
Yes.
Okay.
That doesn't make sense, Dale, right?
What doesn't make sense?
You don't want higher IV for an Iron Condor.
Well, you're both buying and you're selling, but you're selling it closer, so you're getting paid more for those short strikes.
Right. So you don't really want the volatility to go in the money.
No, but if you go with something in low IV, just try it. Go into Johnson & Johnson and try to sell a strangle. And you just will probably, or go into something that's a utility, or something that's got like no implied volatility, and you just don't get paid.
Oh, no, I get you. That's what I did strangles this past week for our assignment. And they were the easiest money, but you had to buy like 20 and the buying power was crazy.
Well, we just did one on Amazon, where you got paid $2,000 and it took you about $7,000 in buying power.
Yeah.
That's in terms of risk, or in terms of buying power. Now, it's a huge underlying, so I'm not necessarily advocating that, especially for smaller accounts. If you've got a 6-figure account, no problem. Trade some strangles or straddles in Amazon. But if you've got a 5-figure account, I probably might not put all my eggs in that basket. What do you think, Tommy?
Well, I think I understand what was just being asked. With the higher implied volatility, you would expect the underlying to move more. That's what the volatility is about, right?
Right.
And Iron Condor is a neutral strategy.
Yes.
Right. So don't those two things conflict?
They do. But the reason you're choosing it is because you're getting paid more. for taking some risks. Let's pick a, maybe you guys could understand it. Let me find, and I don't even know what Johnson & Johnson, it used to be that it was, you know, it just didn't have much IV at all.
It makes sense. I mean, I guess what you're saying is, I mean, you get more because the volatility is higher, so you get paid more on your premiums.
Right.
Yeah. As opposed to like, you know, like I used Oracle because I know it doesn't move, but you're right. I got 50 cents a contract. So I had to buy 10 contracts to make it worth my while.
Right.
Yeah. So okay, I understand. Yeah.
Yeah. So you just gonna want to get paid for taking risk. So you want to find a sweet spot. For me, in the past, trading strangles around Tesla, I didn't like it because I really got hurt several times, you know. So for me, it might be a game that's too big. You know, it's almost like you're playing PLO, but you don't, you know, you'd kind of like to play 25-50, but you're like, I don't know, that's kind of dangerous for my bankroll. So you scale it back to play something that's more within your risk tolerance.
One I used to do a lot was Boeing.
Okay.
It had a really good premium on it.
Okay.
You know, just you would go like one strike and get $5. It was nice.
Giotcha. Well, it's all, and I like the quote I heard this week: for every gimme, there's a gotcha.
Mm-hmm.
And your gimme for picking high IV is you get paid more. Your gotcha is it tends to move more, you know, and there can be times where you get hurt. So you just kind of pick the amount of risk that you're willing to take. And that's where you can define a risk strategy with an Iron Condor, perhaps keep yourself out of getting hurt too badly. Well, I look at the time and it's 6:04. So I do want to respect everybody to keep these at right an hour. I promise I'll be here till the last person leaves. Somebody asked something in the chat. Oh, that was Nancy. I got to leave. Thanks, Dale, for all you do. Thank you, Nancy. I'm going to go ahead and stop the recording, and then